Hi investors, welcome to SOIC. So in today's business analysis, we'll be talking about IOLCP, right? So before I start talking about IOLCP, there is a very interesting quotation. The quotation goes like this, that the stability and the longevity of cash flows is the umbilical cord that actually feeds the valuations, right? Again, I will repeat that the stability and the longevity of cash flows is the umbilical cord that feeds the valuation of a business. So basically this means that sometimes we see businesses that trade at single digit PE multiples. Sometimes we see businesses which are trading at a very higher PE multiple. And again, sometimes we see businesses which used to trade at a very high multiple but now they are trading at a very cheap multiple because of some inherent business fragility. So if the cash flows of a business are stable, if the competitive positioning of a business is stable, then these businesses tend to get higher valuations as compared to a normal business. When the cash flows of a business are in a structural decline, for example, the newspaper industry, when the cash flows of a business are in a structural decline, so what happens is that the eventual PE multiple also collapses. Another example for this is the radio business, because radio industry again is an industry which is not growing. It is a stagnant pond, right? So again, when cash flows do not grow, the PE multiple also falls. With this, we'll get into the business analysis of IOLCP. So currently, Vijay Garg, who has an experience of 35 years, is the MD of IOLCP, and IOLCP has two big key business segments. The first key business segment of IOLCP is the API business, and the second key business segment of IOLCP is a chemical business. Now first we'll talk about the API business. So if we look at the API business, close to 80% of their sales actually currently come from a product by the name of Ibuprofen. Ibuprofen is nothing but painkillers. Then 4% of the business is coming from this product, and close to 10% of the business comes from metformin. Metformin is an API which is used to treat diabetes, right? And the other APIs are a very small part of the business. Now, one interesting thing to notice in APIs is that this is the value chain. First, we have the key starting material, then we have the intermediates, then we have the API, and then we have the formulator. Now, in this value chain also, we have a lot of differences. Now, first we have the key starting material, then we have the intermediates. Now, even in intermediates, we can have complex intermediates, right? Now, complex intermediates are basically more difficult to make for a company. Secondly, after intermediates, we have APIs. Now, APIs are also of two types. First is the generic APIs, and second is the complex APIs. Now, generic APIs basically serve to formulators who actually produce generic products, basically copycat medicines. And complex APIs actually serve formulators who produce complex generics or complex formulations which are more difficult to make. This is how the unit economics of the entire API industry looks like. So if we look at generic APIs, so then we get to know that in this part of business, there is more competition on the supply side. There are higher number of DMF filings. Basically, for every molecule, there are more players who are basically filing their products. And the key to success in this line of business lies in lower cost and economies of scale. Second type is complex APIs. Now, complex APIs are more difficult to produce. Complex API basically means that there's lesser competition on the supply side. It's all about process expertise and the ability to handle chemistry. So if we look at something like a Newland Labs, so it is into complex APIs. The niche API business is complex API business. And lastly, there are more complex to file. Basically, there are very low number of companies who are filing these APIs, and their market is currently growing at 10% CAGR. So when we talk about IOLCP is a generic API producer because more than 80% of their API sales come from Ibuprofen. And what is actually Ibuprofen? So if you look at what is Ibuprofen, basically, have you heard of the brand name Combiflam? So basically, Ibuprofen is an API that is used to produce Combiflam. And what is Combiflam? Combiflam is basically a painkiller, and it was invented in 1960s. It is also used for minor aches and pains, and it is also known as NSAID. Basically, it's a non-steroidal anti-inflammatory drug. So it is something which reduces pain. And some of the key customers in API division are Alembic Pharma, Indoco, Cadila, Granules, Reckitt Benckiser, Cipla, right? And more companies like Marksans Pharma and also a company by the name of Sanofi. If we look at the Ibuprofen value chain, so then we get to know that again we have the key starting material. like in every formulation we have. From key starting material, we have intermediates. Now, the intermediate of the ibuprofen is known as isobutyl benzene. Now, there are two companies in India which are producing isobutyl benzene. One is Vinity Organics, right? And the second one is IOLCP. And now Vinity Organics is the world market. Vinity Organics is the world market leader in isobutyl benzene, and actually IOLCP has backwards integrated into isobutyl benzene. So IOLCP also produces the API by the name of ibuprofen. So isobutyl benzene, which is the intermediate, is backward integration for IOLCP. And at the end, we have formulations like formulation players like granules, right? So this is how the supply chain looks like. But in this product, particularly ibuprofen, why I'm talking more about ibuprofen, because this is more or less currently a one product company. Now, in this product ibuprofen, if we look at the unit economics or the industry structure as of now, so there are close to 5 to 6 players. IOLCP has close to 35% market share in the world, and they claim to be the lowest cost producer, right? And I think they have a capacity of close to 12,000 tons per annum. Second company that comes close to it is Solara. And Solara has recently expanded their capacity of ibuprofen, and they currently have a capacity of close to 8,000 to 8,400 tons per annum. I think their recent expansion was completed at Vizag. So third player we have is BASF, fourth player we have is SI Group, and one more new player which has entered is SMS Pharma. So again, one thing which is very interesting to notice is even Solara actually claims to be one of the lowest cost producers of ibuprofen. So we do not actually know whose claim is right now. If someone wants to learn how to analyze businesses, and if someone wants to watch SOIC sectoral webinars, and recently we also did a monthly newsletter in which we interacted with a very good investor. I think he's an industry stalwart of more than 20 to 25 years of experience. And also if someone wants to understand that how valuations work, so we are doing a very detailed webinar for SOIC students about how the structure of valuations and what is the importance of valuations on 19th of June. Right? Now, coming back to the video, if we look at IOLCP, so currently more than 75% of their ibuprofen sales go to semi-regulated market. Now, there are basically two types of markets. One is regulated market and one is semi-regulated market, and then there are markets which are rest of the world. So regulated markets are countries like US and Europe. So here there are very high regulatory entry barriers. Secondly, if we talk about semi-regulated markets, so these are basically some of your African countries like Brazil. These fall into semi-regulated market. Then again linked to semi-regulated market, we have rest of the world. So currently 75% of the sales are going to semi-regulated market. This is important to know because in regulated market your margins are higher. So per kilo of ibuprofen, you get $2 extra if you sell into regulated markets. But currently IOLCP is selling 75% in regulated markets. Now this is why it is interesting to study the history of a business. So in 2015, right? So actually you can all open the annual reports of IOLCP. IOLCP went under a corporate debt restructuring in 2014-2015. The reason being that one of the key reasons was that in IOLC, since they are so dependent on ibuprofen, what happened was the prices of ibuprofen crashed, right? And secondly, what happened was they had an issue in producing the quality of ibuprofen. So basically their quality of ibuprofen also went down. So customers customers didn't take their orders, right? So basically didn't take the supplies from IOLCP. So this is why this company went under corporate debt restructuring, and they also have had a debt by equity of 2.5 times, right? So one key thing to consider over here in the API segment is that this business actually just like Deepak Nitrite's the Dazda business which we have talked about, in this business they do not have complete pricing power, because at the end your realizations depend upon the supply and demand situation in the market. Now, what interesting thing happened in this line of business is that in 2017, close to 2016-2017, like in somewhere around 2017, BASF shut down its plant of ibuprofen, right? And this led to artificial increase in the realizations of ibuprofen. This is why they started reporting better margins. From I think from 7-6% margins, their margins went to 12 to 14%. And again in 2020, because of COVID-led induced demand, because of coronavirus, there was such a big demand and there was so much stocking that the prices of ibuprofen actually went through the roof. So within a short span of 1 year, the ibuprofen realizations rose by a lot, and as we can see, the stock price also went up by a lot. So this is where one of the key interesting things is that since they had so much of gain, what they did was that they completely deleveraged the business. Now they do not have any debt on their balance sheet. From 2.5 times debt to equity in 2015-2014, currently the debt to equity has fallen somewhere close to 0 to 0.07 somewhere around that. So basically it is a debt-free company right now. And the second line of business is the chemical business, the commodity chemical business. Even in this line of business, more than 60% of the sales are coming from a solvent by the name of ethyl acetate. And if we talk more about ethyl acetate, so ethyl acetate I've already covered in my jubilant Ingrevia video. So ethyl acetate is actually a green solvent, right? And it is used in various industries. Now currently, if we look at the production capacities of ethyl acetate in the country right now, so the Jubilant Ingrevia or Jubilant Life Sciences has the highest capacity, somewhere close to 150,000 tons of capacity, and their capacity is being utilized at somewhere close to 70%, 79%. Secondly, you have Lakshmi Organics, which is close to 82% utilization, and IOL Chemicals has a capacity of 87,000 tons per annum. So and they have a utilization of only 45 to 48%. And if you look at the applications of ethyl acetate, so basically it has lesser toxicity as compared to other solvents. So basically it is more environmentally friendly or more eco-friendly, as they say. And secondly, if you look at it, so second usage of ethyl acetate is it is used as biocontent. Second usage of ethyl acetate, it is used to mix a lot of solvents, right? So basically it is used to create reactions as well. Now if you look at the capex plans of IOLCP, and this is where things get interesting, that because they have a lot of cash flow now, they have a net cash balance sheet, that they are spending close to 10 crores on ethyl acetate and 60 crores on gabapentin. Gabapentin is again an API which is used in central nervous system treatment, right? It is used to treat seizures, right? And secondly, they are also setting up API capacity for 2-3 products like multi-purpose plant by the name of LFU, right? So as we can see here, so they are targeting close to 150 to 200 crores of spend on capex, and they are also guiding for 20% profit after tax margins. And this is how their API pipeline looks like on the right. But again, here I have a lot of cognitive dissonance about this company. Is even if we look at a API like gabapentin. Now gabapentin, they are trying to get into by spending 60 crores, and they claim that they have a process in which they're backwards integrated. But companies like Hykel and DVs are already there in the API, right? Hykel has a 24% market share, whereas DVs has somewhere close to 7 to 10% market share. So it is difficult to see that how this company can actually gain market share in this molecule, that is gabapentin, right? Even if I look at the other API products, apart from one or two, like even in other API products, there are a lot of Indian DMF filers. So it is actually a generic API company, and this is one of the reasons perhaps why it gets a lower valuation. Now if I look at the financials of the company, so if you look at the return on capital employed, so return on capital employed, like before 2015 used to be at 8, 10, 11%, and in 2015 it fell to -3% when when the company got bankrupt, right? Now it is close to 56 to 69%, right? And if I also look at the operating margins of the company, operating margins from a low of 3% have expanded to 30%, right? And even the cash flow from operations has grown by a lot in last 2-3 years. Now gross profit margin has also increased in last 2-3 years from 22% in 2015 to close to 45% in 2020. And the debt to equity ratio has already fallen, as we discussed before, right? But problem is the problem that happens in such types of businesses is that there are two categories of stock. One is a multi-bagger category and one is a compounding category. So basically a compounder can be a multi-bagger, but if a multi-bagger doesn't sustain, or if it isn't structural, so actually a multi-bagger can destroy wealth. So I think IOLCP, according to us, again, we are not SEBI, so we do not have any certification from SEBI. So again, this is not any buy or sell recommendation. So I think IOLCP lies under the second category, right? So it's a multi-bagger stock, but I don't think it has any structural advantages which can lead to long-term gains. But one good thing which has happened over here is that ethyl acetate prices in last 1 year or last 6 months has risen by a lot. I think if you look at Tijori Finance right now, so their ethyl acetate prices have risen by 30-40%, which can lead to which can actually give benefit to IOLCP. So some of the risk in the business are, so first risk in the business is that there is over dependence on ibuprofen. Second risk in the business is, which is again linked to the first risk, that there could be a correction in the ibuprofen prices. Just remember what happened in the worst case scenario way back in 2015, right? Third risk is, what if the prices of ethyl acetate also correct? Now, ethyl acetate is a key product for Lakshmi Organics, and it is hardly a 7, 8, 9% EBITDA margin product, right? So remember, even in ethyl acetate, it's a commodity chemical producer. It is not producing specialty chemicals, right? Third thing to consider over here is that, so this is something which you have to do, if you have to read the annual reports, that there have been, there have been related party transactions. And fourth thing is that the increasing supply of ibuprofen, even BASF has come up with the plant, so we don't know when the supply comes. And secondly, interesting thing to note, even SMS Pharma has entered into ibuprofen. And lastly, the last risk in this business is that even the newer APIs they are entering into have a lot of competition from players like Divi's, Heikel and Solara. So this is what Warren Buffett has to say, that the single most important decision in evaluating a business is pricing power. If you have got the power to raise prices without losing business to a competitor, you've got a very good business. And if you have to have a prayer session before raising the price by 10%, then you've got a terrible business, right? So again, according to our SOIC filters, so we try to look for sustaining operating margins. We try to look at companies where operating margin direction is positive. So again, this business is out of a circle of competence, and I think this is one of the reasons why it trades at a single-digit PE multiple. It could be it could be harmful as well, or it could be an opportunity as well. If you think it's an opportunity, then you have to assess in the newer products they are entering. Then you have to think that they'll be actually able to grab market share from other companies, and the margins they get in the newer product will be really high. Secondly, like if you think that it is too tough box like what we think, then basically what can happen is, if the ibuprofen price is correct, even if they take even if they take other part of the business to 60 to 50% of the sales, still ibuprofen will remain a major driver, because it will be contributing close to 40 to 45% of the sales. This is a key risk in the business, and it is difficult for us to take a call on the prices of ibuprofen. Thank you for joining us. Hope to see you in the next business analysis of SOIC.